Ladies and gentlemen, good day and welcome to the Speciality Restaurant Q4 and FY2024 earnings conference call hosted by ICICI Securities. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhuwania. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. It's our pleasure at ISEC to host Q4 FY24 results conference call of Speciality Restaurants. The management is today represented by Mr. Anjan Chatterjee, Chairman and Managing Director, Mr. Avik Chatterjee, Full-Time Director, and Mr. Rajesh Kumar Mota, Executive Director, Finance and CFO. I will now like to hand over the call to Mr. Anjan Chatterjee for his opening remarks, post which we can open for Q&A session. Thank you. Over to you, sir.
Thank you, Karan. Good afternoon to everyone. Specialty Restaurant, as you know, has been there in this food and beverage industry for quite some time. I'll just give you a short background of the fact that we are known to be Oriental brand, that's the mainland China being the flagship primarily. So during pandemic, besides the background before pandemic, because that was the most critical time of our life and so many lessons to learn. So during pandemic, what we did was, it was initially shut, as you know, that nothing was moving. Slowly, in between, there was an interim period, but to keep the brands relevant, it was important for us to be on top of people's mind. So after 10 or 12 days of understanding that deliveries are continuing, the government allowed us to do that. We concentrated on the deliveries because dine-in was zero. Historically, the company has been a fine dining company in the sense it's primarily dependent on the dine-in footfalls. But during that particular period of time, we realized that the 7-8% of delivery that we were getting was not a reality, and this will become a trend. We quickly went back to the drawing board to understand this as the pandemic was towards the end, Omicron time. We worked back to understand that this is going to be a vertical in itself, and we put a lot of work, got a senior management person to lead and head this delivery vertical, started working on the packaging and all the paraphernalia, went back to the aggregators, renegotiated our deals wherever possible, and then we understood that this is going to be a reality. So what has happened now is that from 7-8%, I don't have the specific, we have grown to a 28% on delivery, which has become a vertical within our company. So then we're talking about now on the fine dining. As the pandemic started ending, we saw the dine-in footfalls growing, and it continued over a period of time, and that was a period of revenge eating, revenge tourism, which is completely known and understood by everyone. So that particular fiscal, we understood that, yes, we can now go back because pandemic forced us to shut restaurants. We were actually on the fence sitting restaurants which were not making profit. So we were kind of compelled, this is a lesson, that we shut 29 units of ours. The ones which were actually not doing well enough for us to work for them. After that, we understood that now we have to go back to the growth path. I'm happy to tell you that we have realized and we have understood that the world is changing from a mainland China, which has been the flagship. We had to line extend ourselves to the Asian cuisine. And fortunately, we had a brand which we had done way back almost 12 years ago, which is Asia Kitchen by Mainland China, which started with Goregaon, and then we did it in Pune and did it in Bangalore, and Calcutta. So we started looking at that brand very closely, and you'll be happy to know that we did 5 Asia Kitchens in the last fiscal. And going forward, there'll be many more Asia kitchens coming. It was important to understand that many of our restaurants have lived almost for above 18, 20 years. So it was important to understand for us to renew them, refresh them, and renovate them. So during this period, we have also renewed and renovated 3 restaurants, one of Powai, mainland China, which is Mother Mainland China. Then we did another one in Andheri West, and the third one was in Pune, opposite the Marriott, that's the ICC. These are all iconic stores of ours. And we had to take a shutdown, compulsive shutdown for almost 3 to 3.5 months. And this was important that we had to bite the bullet. We said that, yes, it will be shut down, revenues will be down, profitability will be affected, but it had to be renewed, refreshed. So that's one, and we've seen SSG growing after that. As you know that there's a fatigue in terms of decor and the look and feel, and the world is changing around us. So that was one part. Now that we talk about, we are on a growth path. As you know that these are the restaurants which are built, and slow and steady growth is coming in and takes 6-8 months to break even, but we are extremely encouraged because the anchorage of the mainland China makes a lot of difference. Asia Kitchen is anchored by a mainland China, which is the most familiar brand in terms of the recall and the respect. Now, the growth that we have coming forward is the details which will be fielded in the Q&A, but I can only say this to you that within this period of time, my son Avik, who has come in, and he's much younger and not as old as me, so he came in with the concept that it is important to have certain wet-led restaurants because the average age of Indians is low, and it's important, and they're all going out to not just eat, they're also drinking. There's an experiential truth which is coming as a reality. So quickly, he built a restaurant called Episode in Powai, which was piloted over a period of time and has been showing extremely good bottom lines and EBITDA levels. Then, so now going forward, there'll be a combination of the Asia Kitchen and Episode, which is details of which will be given by Avi. One interesting thing which is important to be mentioned here, our kitchens were very large and we had an opportunity to sweat them. During pandemic, we quickly adapted that all the Asian brands in the form of mainland China, which is the mother brand, supposing it's in Andheri West, we added Asia Kitchen delivery there, and also actually pressed the button on a brand called Hakka, which has a few dine-in restaurants only in the city of Calcutta, and we got that into the kitchen. So it's called the kitchen within kitchen. So there are 3 delivery happening from the same unit with manpower which is fixed. Then you have the only cost is food cost and the aggregator's cost. So that has also given us a lot of encouragement. So any restaurant that we are growing and building now, we are putting 3 brands coming in because they're all Oriental, there's a synergy. So they are giving us a lot of strength in terms of deliveries, which is very much a reality and possibilities. And the combination of a wet-led, which is in the form of Episode, number of restaurants, etc., will be taken by Abhi. And the Oriental growth with the mainland China line extension with the anchorage of mainland China will be the futuristic levels of ours. One very important thing is that we've done a lot of mistakes. We have realized that expansion without profitability has no meaning. As you know that any entrepreneur at any given point of time gets enthused by getting into an expansion mode, which is very right. But some of them were pre-timed, like Indore and places like Chandigarh, which is now showing better colors. But Indore, Jaipur were not ready at that point of time, although we've got to all these cities because we understood the expansions will be Bangalore was another one. So now we are back to one understanding that it will be slow and steady and profitable growth. But we also realize that in the short term, we will have to take some hit or the other because all these restaurants mature stores take at least 6 to 8 months. So it actually builds in a little bit of short-term trouble and turbulence on the bottom line. But in the longish term, we will understand that we have a formidable brand, we have a bandwidth, and we will be able to win. So this is the overall understanding and background. So any Q&As on the future or any other questions, I leave it to the forum.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Deepan Sankaran Narayanan, Trust Line PMS. Please go ahead.
Good afternoon, everyone, and thanks a lot for the opportunity. So firstly, from my side, so what is the kind of store additions happened during last year, and how many stores are we planning to open next 2-3 years?
So I mean, there's a bit of a jar in this particular sound, but I would like to repeat your question as we understand for my comprehension. So you're talking about the number of restaurants that we are going to be opening in next 2-3 years?
Yes, sir. And also, what is the store addition happened last year?
Yeah, okay. So I will just leave this to for Avik, my son, Avik Chatterjee, to take this question.
Sure. Hello. So last year we opened 5 new Asia Kitchen restaurants, and we renovated 3 mainland Chinas in the last fiscal. In the years to come, this current year we are on track to open 8 new restaurants, a 9th may come in, and in the next 3 years we would be opening minimum of 25 new restaurants.
Okay. And when we are talking about this renovation and of these our existing stores, so what is the kind of capex planned over there, and the stores which have already renovated, so what is the kind of incremental growth we are seeing over pre-renovation stage?
Sure. So the first point is the capex is around 2 CR per store. This is only on the stores that have crossed 17 to 18 years of existence. And with this, we've also understood that we do have a 25% overall revenue jump, which includes our liquor, food, as well as delivery for the units.
Okay, so how many stores are we planning to renovate over the next 2-3 years?
Over the next 2 years, it would not be more than 3.
Okay. And what kind of capex we are planning for these new stores?
25 CR for the new expansion.
Okay, thanks a lot. I'll join back with you.
Thank you.
Thank you.
Thank you. The next question is from the line of Nitya Shah from Kamakya Wealth Management. Please go ahead.
Thanks for the opportunity. I wanted to ask what's the update on the inorganic expansion that was planned due to the heavy cash on books. Any update on that?
Hi, Anjan Chatterjee here again. So we've been talking to an international oriental brand. The discussions are on, but as you know, many of them, the ask could be difficult for us. So we don't want to get into a situation because with God's grace, we've been able to create brands and have the capacity to expand them. So we have to take an understanding internally that if the number which they ask for is very high, which is being negotiated at the moment, it may be a possibility that we would not do that. But the discussions are on, not just with one, and there's another one, an association of our master franchisee in the form of, who could be associated with us and we could get into a partnership with them. That's also a discussion which is on. So these are under, I would say that discussion almost towards the end of negotiation, and we should be giving you a news soon.
Okay. And just to understand that you had given a presentation a few months back where you had given targets of, tripling the revenue over the next 6 years with margins of 25%. So I'm guessing this growth will be coming in from all inorganic expansion, because if we see the last 10 years, your sales growth, compounded growth rate has been around 10%. So if you're guiding for 20% compounded growth over the next 6 years, I'm guessing a large chunk of it would be only through inorganic, right?
Yes, it will be a combo of both. And as we are understanding that the discussions are on, so we will when we projected this kind of a growth, which was completely based on a combination of inorganic and organic.
Right. And sir, you had raised money through a preferential issue. So how much of that money has been utilized, and how much is still left?
See, the total money which had to be coming in was, how much was that? So out of the 49, to be specific, 24 crores is already used.
Okay. And what is the cash on books currently after this quarter?
Exactly today, 169.7.
Okay.
Good.
And was there any reason for a sharp margin fall in this quarterly result?
Because of the fact that we've added new stores, 5 of them, and as you know that they take time to become mature, so we also have to give invitation and introductory prices to get in more footfall for a period of 3 to 4 months, after which we slowly add and come back to a level. So that's the reason.
And I just wanted to understand your vision, excluding the inorganic path of growth. For your current scenario, what is the vision going forward, just to understand for the next 2 to 3 years?
I'll let Avik talk about this.
So for our current vision is to strengthen our stance on the Asian market, Asian food business, which is with our power brands, Mainland China, Asia Kitchen, and Hakka, which is our delivery-friendly brand. That is our first priority. Alongside that, our vision is also to grab a bigger market share in the wet-led, liquor-driven businesses as well, which is obviously paired by food. These are the 2 categories that we would be developing within the company, and that would also show our future growth and expansion.
Okay. And lastly, I wanted to ask, what kind of money would you be spending on the acquisition? And with the balance cash left, do you have any plans of increasing your holding through a buyback or anything of the sort?
Currently, we are not looking at it because, we don't want to get into a situation where we end up borrowing money, huge funds coming in. We've been always believing in a debt-free company from the day one. And if required, we will dilute some stakes, and buyback, etc., will come as and when we go with the cycle.
Right. And there were also some catering initiatives that were undertaken in the last 1 year. Any progress on that?
Yeah. So we've already built one banqueting hall in Calcutta, which is the fairly largest, getting into finishing stages. One is, so the second one is coming in Bombay, where we already have an asset and we are renovating that. and there could be a possibility in Bombay City, in Bandra. We are under discussions to do that. And internally, we've actually got a vertical for catering, which is called Speciality Experiences. And it is, I would say that it's growing slowly and steadily.
Okay. Thank you. That's all from my side.
Yeah. Thank you.
Thank you. The next question is from the line of Gaurav Patel from Total Finserv. Please go ahead.
Hello?
Yes, sir, you're audible.
Am I audible?
Yes, sir.
Yes. Okay. So, I visited a Dadar outlet, which I think of Asia Kitchen, which recently opened in the month of October or November 2023,
Right.
in Mumbai. So I visited first time in the month of December, I guess, or November, and on the 21st of February I visited first time, and at 9:30 there were hardly 10 people. So that's actually a prime time for any restaurants, but there were hardly 10 people. I asked one of the captain, and he said that it's a fairly new restaurant, so that's why there is no awareness about the restaurant. That's why there is less crowd. Then second time I visited on 9th of May this month, and around 9:45 there were 15 to 20 people, including 3 of us. So my question is, how much time do we give to any restaurant before we think of closing it down?
See, these are, as you know, that as you open a restaurant, there's no awareness to start with. We also go slow. We don't have a celebrity coming and opening it because that's what we believe in, the customer is the celebrity. So during the time mid-October we opened it. When you went in December, it was just about to be, we were pressing the button of getting amplification in terms of awareness. And then again, when you went on the second time, I don't know if you went on, I think you went on a weekday.
Yes, I both the times I went on the weekdays only.
Yeah, so weekdays, as you know, are weak, and it's about Friday, Saturday, Sunday is the peak all over the world, including India. So if you go now on a weekday, you will continue to find limited footfall, especially during lunches, but you'll be very happy to know that the numbers have grown to a level that we should be breaking even in next few months, and it's growing by the day, by the hour. The interesting part is that, as you know, that mainland China is a known brand, and we have that kind of a regard and respect. So the moment people come and see the anchorage of Asia Kitchen with mainland China, which takes a little discovery time, we see people coming in and getting into, the restaurant, and they use it and then believe that, yes, they like the restaurant, and then hence the loyal customers start coming in.
And another point just to add to that is sometimes markets take some time for restaurants to build up. For example, at the same year, we opened Asia Kitchen in Viviana Mall in Thane, and probably the first week we were full house. So markets also depend on the locations, and locations
specific. Yeah, that's also mall specific, because Dadar, as you know, is a very price sensitive market, and although there's a Bastion in the same building, after Bastion came in, of course, the footfalls grew. So that Kohinoor Mall takes a little more time than maybe a Viviana, or if we talk about a Wakad, which we have opened in Phoenix Mill. From the day one, we've seen footfalls coming in, because these malls have the capacity to attract more people, because they're more popular and they've been in the business for a longer period of time.
Okay. My second question is about why we are doing all the asset-heavy businesses. Like just now you mentioned that you are working on one of the hall in conference hall in Kolkata, and one more you are looking in Bandra. So why we are doing it on our own? Why we are not just running our own catering business?
So we are actually doing a dynamic model. One space in Calcutta is a building which is again under partnership, and we are the sole caterers for the banquets. In our catering division, we do also outdoor catering. That means the rental assets are not ours. We go up to a ground, a hall, a home, and various locations for corporates as well. And these are the different kinds of models that we have for catering. The one which we're also trying to do in Bandra is not our own asset. It's going to be a partnership in terms of we would be the catering wing for this premise. The ownership and the capex would be from someone else.
Okay. Okay, thank you. That's all from my side.
Thank you.
Thank you. The next question is from the line of Tushar Jaghade from Kamakya Wealth Management Private Limited. Please go ahead.
Yeah, good afternoon, sir, and thank you for the opportunity. Just wanted to know any membership or loyalty program are you thinking of for the entire all the brands of the specialty restaurant?
Very good question. In fact, last night was the final discussion to do this. You see, pre-pandemic, we had a loyalty program, Speciality Privilege. And during that period, it just dithered out and we couldn't get this back for many other priorities that we had. So we are in the process of doing this. At the moment, it is, as you know, it is all digital. So it becomes much easier for us to do it. So very soon you will have a Speciality Privilege card coming back.
Fair enough, sir. And sir, recently, Devyani got into JV with PVR in order to increase their reach. So just wanted to understand any initiatives from our end in order to, expand our brand image going forward.
See, everybody has their own priorities, but at the moment, as we are looking at, we are very bullish on the fact that we will be able to leverage the mainland China brand, the Oriental brands, which is Kitchen Vision Kitchen. We are adding deliveries coming through. So we are not looking at any opportunity to get tied up currently, but as and when anything else happens, you have limited time and limited money and also the priorities that you have. So these are the first levels of our understanding and growth. Later on in the life cycle, we will definitely consider something which is worthwhile.
Fair enough, sir. So currently, sir, liquor is what percentage of our sales and what are the targets, internal targets to grow that?
Avik, would you like to take this question because the bars that you have built historically were dispense bars?
So in the totality of the company, currently we are at between 11 to 12%, but we feel that there is scope to grow in this space. Hence, we will be growing with 3 new wet-led outlets for this year and 9 more to come in the next 3.
Yeah. Interesting. Would like to add that all restaurants which were the ones which we are renovating and refreshing used to be having a dispense bar which was not in the line of sight. Avik took this responsibility to put all the bars, the new restaurants which are being renovated, and of course the one which are Asia Kitchen by mainland China, have a line of sight bar which is interactive, wherein, as you know, that it's all about, getting, there's an impulse thing, so you have, the bar coming in, the barman doing some kind of a activity at that point of time, so you get enticed to take more and more liquor. The liquor sales have slowly shown growth, and we are doing a lot of interactive packages along with Diageo and Pernod Ricard, and they are the ones who are helping us. And going forward, there's a scope to go into a level of 15 to 18%.
Fair enough, sir. And I just wanted to know, like any new store you open, what is the target break-even, like how much time it would take on an average for any store to get break-even?
Between 6 to 8 months.
Fair enough, sir. That was helpful. Thank you.
Thank you.
Thank you. The next question is from the line of Neerav Siksaria from Living Roots Analytics. Please go ahead.
Yes. Hi. So, Episode as a brand has done really good for us. So, how many new stores under the same brand are we opening?
We would be opening 3 more this year.
So, that will be under Episode, right?
Yes.
Okay. And what is the totality of capex that you're planning for the year ahead?
25 to 30 CR.
And what about the new 25 restaurants that will be opening?
Sorry?
So, the 25 to 30 CR that you have mentioned is for 8 to 9 restaurants, or is it in total for the 33 restaurants that will be opening?
No, this is for the total for this current year, which would be 8 to 9 restaurants.
Okay, and what will be the totality for those 25 restaurants?
75 to 85 crores.
75 to 85. Okay.
Because, it depends on the kind of size of the restaurant, and some could be around 2,500, some could be 3.
Okay. And just adding on to the previous person's question, how are we seeing the increase in alcohol-led revenue?
By the growth of brands like Episode 1, we see our liquor ratios in that space is 60 to 40, which is 60% being liquor, 40% being food. Hence, whereas in an Asian restaurant of ours, it's under 20%. So when we grow Episode 1, we see that 60% ratio of the food and beverage would be liquor. Hence, that adds to an overall increase in the liquor sales for the company.
Hence the margin.
Okay. And just to follow up on that, primarily we are aiming to increase our wet-led income via Episode and not via Coca-Cola or any other brand, right?
That's correct.
So are we planning to close those 4 Coca-Cola restaurants that we existingly have?
No. So that's currently profitable for us, and any profitable restaurants we do not plan to close. But for new expansion, new growth, and new market entry, Episode 1 seems the best proposition for now for us.
Okay. And what is the expansion plan that we are going ahead with this brand? Is it a cluster-based approach? Since the existing outlet is in Powai, so are we planning to open more outlets in Mumbai and expanding it into other geographies?
Yes. So we'll be opening 2 new in Mumbai this year, 1 new in Calcutta this year.
Okay, and the 9 new restaurants that are coming up are also Episode.
That's correct.
Okay. Thank you so much.
Thank you.
Thank you.
Thank you. The next question is from the line of Amit Upadhyay from Healthcare. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Sir. Yes, sir, you're audible.
Okay, great. So firstly, I would like to congratulate Mr. Anjan for running the show for almost 20 years. I think it's not easy to run a brand in India, and he has proved...
Sorry to interrupt. Could you be a little louder, please? The voice is feeble.
Okay, just hang on. Can you hear me now?
Yeah,
Yes.
better. Much better.
Okay, so as I said, I'm quite happy and pleased to be a shareholder of Speciality Restaurant, and I'm quite happy with the way Mr. Anjan has led the show. And I'm also happy to see the young generation has joined the business, as a shareholder, it's always good to see the progression, how the business is going to grow in the coming years. So my question is regarding, I understood from Avik that there is a plan to expand 25 new restaurants in the next 3 years. I would like to know what part of this expansion will be Middle East focused.
Yeah. So I think you're aware of the fact that the Middle East expansion is based on a model called franchisee-owned, company-operated. So we have we started with the Barjuman Mall unit, Asia Kitchen by Mainland China at Dubai, after which we did Mall of Emirates, and now we have Oman. Within the Gulf, we are looking at minimum 2 stores in Dubai, and we're looking at Saudi because that's another market, and fortunately our master franchise Resolute has presence there because they have a brand called Chowking. So they have the footings there. So as we talk about, we are just finalizing one more location in Dubai and Abu Dhabi. And later on it will be Saudi, wherein we will do one store. As you know that we try and go to one destination, wait for a while. And you'll be very happy to know that if anybody has traveled to Dubai, they will understand that all these stores of Asia Kitchen by Mainland China have not just got the footfall of the predictable Indians, they have been able to attract a huge number of almost 50% of that is non-Indians coming into our stores.
And because of the presence and the response in Dubai, we have gotten franchise calls from at least 10 different countries, of which we'll be analyzing, scanning, and then taking calls to enter new markets with Asia Kitchen by Mainland China.
Okay, great. Good to hear that, and I can second that thought because I live in Dubai and I never miss a chance to go to your restaurant. So kudos to what you have done here. My next question is, when you mentioned these 25 new restaurants, so this is not part of the Middle East. So this is all purely focused on the Indian market.
That's absolutely correct.
Okay, good. And what are the iconic brands that you will focus in the next 3 years for India in these 25 plus 8 restaurants that you will be targeting?
So the power brands for us would be Asia Kitchen by Mainland China, which would also be supported by Mainland China by a delivery. The second power brand would be Episode 1 for the wet-led space. These are the two major brands that we'd be focusing on for dine-in formats. For our cloud or delivery formats, we would be looking at Mainland China, Asia Kitchen, and Hakka as these three Asian strong brands for us in delivery space. Over and above, we'll be looking at our catering division in a very serious manner to be growing it into Calcutta and Mumbai regions.
Okay. Thank you very much. That's it from my side.
Thank you.
Thank you.
Thank you. The next question is from the line of Sachita Sood from Robo Capital. Please go ahead.
Yes. Hi. Good afternoon, sir. My question was, what kind of revenues can we see for FY25 and 26? And if we could also know what kind of margins we'll be seeing for these 2 years.
As you know, we are restricted by not giving you any forward-looking numbers. You can imagine and understand that if you're opening around 3 to 4 Asia Kitchens and also adding minimum of around 1 to 2 to 2.5 in this fiscal. So it will be actually 8 restaurants coming in. So going forward, the revenues which have been historical will be added to that. And the bottom line, as I said earlier, because the new stores take 6 to 8 months, the initial absorption of that particular profitability in the sense that the breaking even time will be there. So I'm sorry, I can't tell you any forward-looking numbers which is not published.
Okay. That's all from my side, sir. Most of my questions have been answered. Thank you.
Thank you.
Thank you. The next question is from the line of Viraj Mahadevia from Money Group India. Please go ahead.
Hi, sir. Congratulations on managing the ship through the difficult period. You did have some cost escalations on the food side. How are you thinking about using pricing as a lever going forward?
Interesting question. The basis on which we had, formed this company was with a proposition of 5-star food and service at non-5-star prices. We're extremely careful, and in spite of the fact that there's been an inflation, for example, there's a 40%, inflation which has come only on one of the proteins that we sell in the form of chicken. In spite of that, we've been able to absorb it because certain things can be negotiated with the suppliers in terms of, giving them, since we have so much of money lying, we give them advances. They need money for expansion, etc. But there is a headroom of going to at least 10 to 12% in terms of pricing. Some of them are introductory pricing, so they anyway will fall into the original pricing in next 6 months. And there is enough scope. As we see the competition coming in, we don't get enticed by the kind of levels they serve. We believe in value. For example, if the average competitive restaurants, if they will be giving a portion size of around 140 grams. We continue to give 180 grams. And the fact that the Indian consumer is extremely sensitive about the value that they get, and hence we have continued to do it slow and steady. But as you said, there is enough headroom for us to go and increase our prices.
Great. We hope to see some of that in the quarters to come. Thank you.
Yes, inshallah.
Thank you. The next question is from the line of Nitya Shah from Kamakya Wealth Management. Please go ahead.
Yes, regarding your international business, I heard very good reviews about your Chaurangi restaurant in London. So what are your plans on further expanding on this brand?
We'd gone to the city of London with the with the restaurant, which is Indian, but we had a differentiation because we came in with the food of the city of Calcutta, which has historicals, and we were also inspired by the old Calcutta, which has shown us that regional cuisine is here to stay. As you rightly said, that you got good reviews. Thank you very much. And we were to do another Chaurangi within the city of London outskirts, but as you know, again, that the whole scenario in UK has not been the most favorable one. And currently we are waiting for things to settle down, but we are in Marble Arch in the heart of London at this point of time, but this has been deferred or parked, if I may say. There have been so many of these approaches which have come in from either master franchises or some other people, but we intend doing this also here. And as you know, we had gone to Houston, the city of Indians, if you ask me. So Dallas and Houston, but Houston was another first stop of ours pre-pandemic. But as pandemic came in, we stopped that expansion. Very interesting to understand that all these brands of ours, particularly in mainland China, has a huge demand in any footfall area where you have Indian diaspora. So as and when our priorities come in, and we understand that UK, since your question was about Chaurangi, we will surely and definitely expand that within UK and US also.
And you don't plan on bringing this brand to India, because I thought you want to address the Indian market also, or is there too much competition?
It's not just competition, because that's a brand we have created for the international diaspora, and we will be able to do this going forward. But any brand which is given birth there, for example, there's a brand of ours called Riyasat, which was at St. Regis in Doha, and which was showing very good colors, but St. Regis decided to, do their own restaurant, so they continue to do that. And these two brands, like Chaurangi, mainland China, of course, and the Riyasat, are the three areas which they're catering to different kinds of audiences. We would definitely not bring at least the Chaurangi at this point of time to India, for the fact that we actually have built it and planned it for an international market.
Right. And just to understand, what has been your marketing spend for FY24 as a percentage of sales, and do you plan on further, increasing this to boost your brand awareness?
Yeah, that is
around 4 to 5% for the percentage of revenue for last year.
So do you plan on increasing this going forward to increase brand awareness?
So, as you understand, and you may have heard, that we have now two animals to fight. One is the dine-in, and the other one is the delivery. Now, in delivery, if you see, there is an important thing that you need eyeballs on that page. So we've been spending a considerable amount in that area. And when we launch a brand, we do our advertising, of course, the social media. Apart from that, we've been doing tactical hoardings and also print, as you know, is the traditional medium, which is not necessarily the best of it. So we've been having a combination of social, that's digital media, and when we launch, we do a tactical awareness campaign in that zone. But beyond that, I think it's only based on festivals and any other spurts which come in during the year, like a Mother's Day, Friendship Day, or a Father's Day, that we do our promotions, some interactive ones. Going forward, it is all a A to S ratio, you understand that. As the sales goes up, I would not like to increase it from 4.5% to anything which is more than that. But if there is an opportunity of some kind which is coming in a particular market where we are not so popular, we will increase the A to S ratio.
Okay, understood. Thank you.
Thank you. The next question is from the line of Shubham Jain from NB Alpha Fund. Please go ahead.
Hi, thank you for the opportunity. I just had one question. You mentioned that incrementally you want to focus on two formats in terms of dine-in, which is Asia Kitchen, Mainland China, and the episode 1. Could you just help me with the store economics? So my sense is it's about 2.5 to 3 crores of capex per store. But what does the peak revenue look like, and what kind of gross margins and margins do we see from these two formats at peak?
See here, Rajesh Mohta this side. On the matrix, basically, let's say what Mr. Avik had already indicated that we spend around between 3 to 3.5 odd crores on a standard 2,500 square feet new restaurant. The gross margins in an Oriental restaurant is between 26 to 27. Let's say cost is 26-27%, which translates into a margin of 74 to 75%. Considering the other elements of expenditure, etc., we do work on an EBITDA between 16 to 18% at restaurant level.
And this is post-rent, right? 16 to 18%?
Yeah.
Okay. And would the economics be similar for an episode 1 as well?
See, here what happens is the throughput in a bar restaurant is much higher, where the EBITDA percentages increase substantially because 40% is the liquor consumption there. So we work on an EBITDA between 22 to 24% there.
Understood. And what is like the peak revenue that you can do from like a 2,500 square foot store on an average?
See, there is a big range here. It could be between 60 to 90 lakhs of rupees, depending upon the location and the delivery.
60 to 90 lakh per month. Is that the right understanding?
Correct.
Okay. Understood. Thank you so much. That was super helpful.
Thank you. Thank you.
Thank you. The next question is from the line of Nirav Seksaria from Living Root Analytics. Please go ahead.
Yeah, I just wanted to know what's the split between the dine-in and delivery for this quarter and for the whole year?
It ranges between 28 to 29% of the total revenues is delivery, and the balance is dine-in.
Could you repeat it, sorry?
28%, to be specific, was delivery, and the balance is dine-in.
Okay. And so since we have revamped few of our mainland China restaurants, are we seeing an increase in alcohol consumption there?
Yes. So historically, it used to be around 9. It has already grown between 10 and 12. And with the bar coming in the line of sight, because they're all new restaurants renovated, we see a lot of interaction happening there. As I said earlier, we are also tying up with the Diageos of the world to get us better, discounts and in terms of the packages. So we've gone very aggressive on offers so that the ratios go up.
So is the ratio similar for the newer mainland China restaurants that we have opened?
they are slightly more because they start from a day one with the line of sight bar, and they are a little more bistro-ish. If you see the Asia Kitchen by Mainland China, it's slightly more casual than a Mainland China, which is fine dining.
Okay. And just to clarify, the alcohol contribution in episode is 30% or is it 60%? I lost it there.
My bad. It was actually 60, and 60 and 40 is food.
40 is food, right? Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Mayank Agrawal, who is an individual investor. Please go ahead.
Hi, good afternoon, sir. My only question is, you have been expanding the business, that is wonderful. So, but I could see that this severely affects the margins. So do you think that you are still planning to go on opening the new restaurants, 25 in the next year? So will the margins go on being affected, and can we see the profits like the tune of FY23? Thank you.
A very important question and very pertinent question. Now, as you know that it's important, growth is expansion is growth. These are interrelated because any corporation which has got enough funds and has relevance of a brand, any relevant brand, it is but natural that we have to expand. Now, even if we have to take bite the bullet and take some absorption of profitability, we are very careful about the store matrix, the zones where we are opening, the kind of diaspora and the density of population. So, in the short term, there may be some pain, but you will see over a period of time, everything changes around because we have to add number of stores, but this time very carefully looking at the matrix and the diaspora, city, etc., which we are very, very, very careful about, but it will be slow and steady growth.
Okay. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask questions. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Yeah, so first of all, heartfelt thank you to all the individuals and the corporations which have come in and have given us an opportunity to talk to all of you. As you know that currently we are not wanting to raise any funds unless otherwise there is a tie-up which is coming in on organic at a point of time, which is not on the table currently as we talk. And going forward, I would like to be informing you this coming in every quarter. We will keep on telling you our progress, and we are on right track at this point of time, and things should show you better and better strategic inputs coming in.
On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.